Now, markets are open. We're going to Chicago for an early look at the trading action. Joining us from the CME is Larry Levin, president of Trading Advantage. Kind of a muted opening to the day, it strikes me. Larry, how's it feel down there post the big rally yesterday?
Yeah, you know, it's interesting, Francis. Certainly we seem to have low volume when we go up, and that's what we're doing, obviously, today. We opened quite a bit higher. We were obviously quite a bit higher yesterday with the Fed action that we had. So a little bit muted, but not surprising on a day that we're opening so much higher. We are certainly getting some people to buy near and on the highs, but a lot of people kind of sitting tight right now with those long positions.
You always give us some good color on where the supports and resistance levels are. I guess we don't really have a resistance that you can see, maybe a level where you think there could be upside.
Well, if you're looking for what a target might be, I would look at 1750. The high right now is 1726. The move was really from 1700 to 1725, 1726, that area, about 25 points in the S&Ps. So you take that and you project that on top of the highs. That puts you at about 1750. Obviously, that's a psychological number. So that, to me, is a target that we probably will reach within the next week or two as the market goes higher. On the downside, you probably look at the 1726. Once we get above there, that will really be a good support level, that first high of those record highs, since we haven't been back up here in a little while. So on the downside, the high right now, although seeing us get above that high, so that becomes a support level, and then around 1750 is a projection.
Now we do.
That's obviously the S&P futures.
We do have triple witching, quadruple witching, I think. How are traders positioned going into those events, which usually happen the day before expiry?
Well, we definitely were a little bit, mixed before the Fed announcement yesterday, right? People really actually were looking for tapering, right? And they were positioned short. Some people, you were hard-pressed to find anybody who said there wouldn't be any tapering. So a lot of people were short. So what you end up doing is getting a lot of those people out of those short positions, and then I would say about half of them, to make a guess, about half of them getting in a long position. Everybody, some people took a big hit and didn't reposition themselves long, but an awful lot of people obviously got long yesterday and are being rewarded today. So that's really what we're going into tomorrow. Unless we see a big drop today, and it doesn't look like that's what we're going to see, then you'll most likely see a lot of long positions coming in tomorrow. We get good volatility, it'll most likely be on the downside. If we don't get good volatility, it'll show you that the market's going up, and it'll be more this low volume rally.
Just on the volatility side of things, I'd heard a lot of people have been positioned. I guess, in fact, they've been positioned maybe a little short on the S&Ps, but they had certainly been positioned long on the volatility side. Did we see a lot of that unwind yesterday? I mean, there were big moves on both the S&Ps and the VIX.
Yeah, a little bit. Keep in mind, the VIX was coming from such a low number, trading as low as 12 and 13. So when you see it jump up to 15, 17 or so, it does jump up on a percentage basis, but it was coming from a very low mark. I do think there are a lot of people that are still long the VIX, but obviously a lot of people jumped out of that, right? Because again, like I always talk about, the VIX picks up on the downside. When these markets, the stock indexes, the S&P, the Dow, other stock indexes are going down, we see the VIX pick up. Obviously the Dow, the S&P, all of those things went up, and so the VIX, while it may have picked up a little bit because we did have a big up day, it's not going to pick up as much as it would on a down day. So that trade may be a little bit short-lived unless we start going down.
The Stock Traders Almanac says the week after triple witching is the worst of all 4 weeks in September. Of course, that's going to be next week. You've been doing this for a long time. Do you think that's going to hold again for next week?
I think the only issue is if you go back and you look at the Stock Traders Almanac, you'd be hard-pressed to find a time when we were about to taper and then we didn't taper. So I think that's the big issue. So I would think that probably won't hold true. That'll be one of the anomalies that will go the other way. The tapering thing's a big deal.
That's the 9 out of 10 that the Almanac often cites. You've been doing, as I said, this for a long time, more than 20 years. I don't think I've ever seen, I've seen a lot of big surprises in my time. They don't usually surprise this big to the upside. I'm usually on the other side, to the downside. Have you ever seen in your years the Fed, who's been trying to get more and more transparent, kind of, maybe take us down the wrong walk so badly?
No, I mean it seems to progressively get worse. That's certainly the case, right? For like you said, I've been a trader for a long time, and the Fed back in Alan Greenspan days and stuff certainly wasn't transparent back then either. But it certainly isn't here, and they didn't have to fix this huge problem or feel like they have to fix it, which they certainly did back in 2008 and even going forward to today. So they're in a tough spot. But I couldn't agree more. This kind of we're calling it the Fed fake out down here on the trading floor in the S&P pit. That wasn't a good thing. It was a good thing for aggressive traders and people who were ready for it. It wasn't a good thing, to be honest with you. I was coming down the elevator to come see you here, Francis, and one of the gentlemen told me, well, yeah, I guess they fixed yesterday, but they're ruining America. So, I mean, there's an awful lot of traders in here that are not comfortable with what the Fed's doing. And, me, I've never been a big fan of what our government does. I don't think they always have our best interests in mind, and it's unfortunate. It'd be nice if we had business people in there running it like a business, but we don't.
Maybe the next guy will be a business person, although I don't think so. Larry, thanks for joining us on what is a busy morning. Thanks for joining us this morning.
Thank you.
Larry Levin is president of Trading Advantage, and he joined us from Chicago.